Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, July the 20th, 2023. Interesting day again. The market has been nothing but interesting lately in the strength of the rallies and then the strength in the turn that we saw today. I was just looking for a fairly normal minute fourth wave pullback, but here in the S&P where I'm going to start today, I was actually even looking for a smaller pullback, a run up, make a new high above 4609, and then pull back in a minute 4. Didn't get that, so I kind of flipped the count just a little bit and putting a 3 and a 4 and a 5 up into this little mess right here, putting the top end for that minute third wave, and then putting my fibs up for the minute wave 4. Now we got down to the 50% mark and then rallied back. Now here, not as bad as in the NASDAQ, and I'll explain why. I can say A, B, but it could be a 1, 2, and then the start of a third. It's just because there was so much bouncing around in the index today, particularly in the S&P. But if anything, it could be an A, a B, and then we have a C, and I can put a 4 there. Now, a lot depends on how all this plays out overnight, because as left, the market cannot break below 45.23 because then wave 4 would overlap wave 1. And that is something I do hold near and dear in terms of it invalidates a count, particularly in the equity markets. Now, what else could be going on? The alternate I'm going to reveal right now, but it's actually, I discussed it, but I just want to show it again. If I move this 1 back down to here, I move 2 back down to here, it makes it for a cleaner 5 up for wave 3 to be put right here. This then would become my minute wave 4, and they have 1, 2, 3, 4, 5 for that minute 5th wave, and then on top of it, the minor 5th wave, and then on top of it, the intermediate C wave, and then on top of that, the primary B wave. That's what I've been counting, but today was a bizarre day because the Dow held higher due to the banking stocks, Boeing, and basically that was it. We had, so I'm sure there were others within it, but the major ones were Goldman Sachs being up $10, JP Morgan being up basically $2, Boeing being up $5. So again, selective type of a rally, maybe. If I kind of go over and I look just to see very quickly what else was up in the Dow that really would have been impressive. McDonald's was up strongly, Boeing was up strongly, Honeywell was up strongly, American Express, Johnson & Johnson. So we had some pharmaceuticals as well that also contributed. And then they finally did get into IBM because of the earnings. But so to revise my statement, what really propelled the Dow and held it higher was a turnaround in a lot of the pharmaceuticals, which have taken the beating lately. So they kind of rebounded a little bit. Goldman Sachs was up major. McDonald's was up, but not more than an exuberant amount. But Boeing held up, et cetera, et cetera. So there was cause, excuse me, to keep the Dow higher, but against a major decline going on in the NASDAQ and pulling the S&P down, and the Russell, not so severe, but it also was down. So the Dow was the lone holdout that stood out from the crowd. Right now, I'm going to give the benefit of the doubt to the market still, or at least the S&P, still holding current support, not breaking below 45.23, and putting in that additional rally. Now, tomorrow is an expiration. Tomorrow is the July expiration. Tomorrow is being reported as being the largest expiration in terms of the number of options that are coming off and the amount of gamma that's going to be freed up. So again, we're back to that conversation about, gamma flows and options and 0 DTE and everything that kind of comes in together to form that perfect storm called the July monthly expiration. With this huge turn today, we may have already started to see, at least in the big tech stocks, some major turns in terms of getting out of positions ahead of tomorrow and either monetizing what they felt or whatever the reasons were, but it did seem to really trade pretty heavily. Now, here again, back to the S&P. If I leave this as is, which my intent is for today, I want to keep in everybody's mind here, if you're an S&P trader, that if it starts to break below here, it's basically going to negate this count and put a lot of weight towards the alternate, which again, 1 comes down to here, 2 comes down to here, 3 moves down to this level, 4, 1, 2, 3, 4, 5, 3. Excuse me, 5. Excuse me. Now, so the sequence that has to kind of take place, it has to break this level, 45.24, we're going to call it. It has to break it, and not just by a few points or a few ticks. It has to break it and start to continue to drop. Now, we may get that if we come down and we break 45.53 and we start heading down to 45.40. Right underneath it, as it stands right now, is the hourly 200 EMA with the SMA at 45.27. If they break that hourly SMA, the 200 SMA, then I'm going to be going with the fact that it's all done. It's all done. And this expiration, there's going to be a mad dash to get out of these positions that they were looking to expire in the money, and adjustments galore happening across the board. Now, remember, it's not just a huge expiration in all the components. It's a huge expiration in the July series, in the Qs, in the TQs, in the SQs, in the spiders, in the SPX, in the ES, all these options. Plus, we're going to, I actually think at the same time, we will start to see a massive rotation out of the dispersion trade that's really been holding the market into a rally phase. And if we see that starting to reverse, that means they're buying index volatility and selling the component volatility. So, and that suggests a massive turn in the market. Why would I buy volatility? Why would I buy the VIX or anything associated with the VIX now if I didn't believe that the broader markets were going to start to go down and go down with some strength, as if saying tops are in and we're heading lower. Now, on an Elliott wave basis, I would be saying that we are going lower in the start of a primary C wave. Let me just review what is consisting inside that primary C wave down. 5 waves of intermediate degree that will be labeled 1, 2, 3, 4, 5. So on the very first leg down, on an hourly chart, I will be looking for 5 waves down. Not of intermediate degree, just 5 waves down. And it may come in a minute degree, or at best a minor degree, depending on how hard the market drops. So when I go over to the NASDAQ, you're going to get a little bit better clarity on what I'm talking about. Here in the S&P, just to wrap this part up, I do want to hold on to or give the benefit of the doubt to the market and the count. The current levels at current support will hold. Market begins to rally again. questionable because we had some earnings come out today. And, yeah, it's could not be good for what's, going on. We'll have to wait and see. But that the market would turn and start to rally. If that is the case, and I could put a 4 here, then I would run, and I'm just going to put this together now. Cut that up to 1 there, and then up. I'm going to say that this low here was it. So then what does that turn into if we're looking for this minute fifth wave up? This is a big if, folks. So please, I'm not calling this minute 4. I can't. But I'm going to give the benefit of the doubt that if it holds, that is what will happen. And here's what you would expect on the way back up. The first is going to be equality, where wave 5 would equal wave 1. And that's going to come in at 46.70. So we make our adjustments. Below that, the second most common would be 0.618, where wave 5 would be 0.618 of wave 1, and that is at 46.27. So you can begin to see it's like some of these lower levels, they might just be the ticket. Now, of course, if it continues to break down and it breaks below 45.24, well, then I've already told you what I'm going to do. 1, 2, 3, 4, 5, and C, and it'll be minute 5, minor 5, intermediate C, primary B. And that's what I'm going to do. In the meantime, here are resistance levels of it for going back up. And to be honest with you, I will clean this up by immediately just taking out the ones that don't have any issue with, I'm going to tell you, and it's going to have to be a total reversal for what we saw today. And it's going to have to, the NASDAQ's going to have to lead it. So all we know tomorrow is like the Dow decides that it's no longer going to be filling everybody's pockets with, we're buying, and they reverse a lot of things here. And that'll drive down the S&P. And if the NASDAQ continues its downside, we could have what might be considered the beginning of a landslide. So again, we're going to be looking at this primarily. If it does a full-blown, we're up close to that all-time high. But this is where minute 5 would be equal to 1.618 of minute 1, and that's 47.40. Right now, this is just being left out there. A lot has to take place before it can be put into place. So I'm going to take it off for right now, and I'm leaving it as it is, and we'll see what happens here. Over in the NASDAQ, the reason the caution flag went out is because of the NASDAQ, which at one point was down over 400 today, while the Dow was up 200. So they were hitting here. Now, I'm going to open this up just a little bit so we can go inside and take a look. First of all, 1, 2, 3, 4, 5. We get a 5 right out of the gate. A, B, C, and then 1, 2, 3, 4 maybe, and then we get a 5, which would be 5, 3, 5. And here, it actually can go all the way down to 15,426 before this larger count is invalidated. But if we went down 363 points today, that would, even if we went down 150 tomorrow, we're breaking. We'll be breaking below this level. And if this get out while you can mentality of trading comes in again tomorrow, then I'm going to be looking at this being broken. And if this gets broken, then this has to shift as well. That 3 comes back down to here. 1 and 2 can stay the same. Wave 3 would come down to here, and this extension would end there with this being 4, and then 1, 2, 3, 4, 5. So while I basically have held off on saying the potential for those current highs to be the finishing level for primary wave B, I've held off on that, giving total benefit of the doubt to the intensity of the rallies that we've seen up until today, to the intensity of this dispersion trade, to the intensity of everyone having to get into stocks like Microsoft, NVIDIA, et cetera, and in fact, even Tesla. Tesla sold off big today, and it sold off under big volume. 173 million, almost 174 million shares of Tesla traded today after they reported their earnings yesterday. There's a big switch out there going on. If they report earnings, and they weren't really awful, but if enough people, enough analysts, enough traders are now thinking, oh, that's it, I don't want this stock anymore, it's not going to go higher. Boom, they all exited today. Now, granted, if 174 million shares of stock traded, there was a buyer for every one of those shares, as there was a seller. But obviously, the sell side had their way with the stock today. So again, in the NASDAQ, this, I would not necessarily be looking for something this severe in a fourth wave that I really would be expecting to hold the 382 and not, I mean, yep, it can get down to the 50, but it started to break below, caught its breath, and pushed higher. And that was in the last half hour of trading today. So prior, we saw them start to hit this, and it really was about, I'm going to say 12:30, 12:35 Pacific time. So 3:30, 3:35 Eastern, before they started to turn this around. But it got hit, and then they'd buy back up, and then it got hit, and then they'd buy back up. So sellers are around. Sellers are out there. And if they're starting to revise how they want to look at the possibility of what Apple's going to report, what Amazon's going to report, what Google's going to report, what Meta and Microsoft are going to report, are they going to be as glorious as we all are, and not we, as a lot of the market players were believing, or even as much as retail, who came pouring back in this week? In the last gap, got to be on board for all of this stuff. If that was any hint, and in fact, if people that really measure or read, volume, if you saw that the buy volume had dried up and the sell volume was taking over, you make your own trades, and without the intensity of the buying, the sellers just showed up and they just started hitting bids. And that's kind of the way it went. So in here, in this NASDAQ, it truly needs to contain and control. And it's getting very sharp to the downside, very sharp to the downside. I mean, this first butt kick started at 15,865 and took it all the way down to 15,695. So it was initially, boom, let's take 200 points off of it right away. Right away, within the second half hour. So it was pretty intense. And then we had some buyers, and then they just whacked it again, and then whacked it and whacked it and whacked it for the next 1, 2, 3, 4 hours. And it was right into that last half hour that they kind of held it up and let it close where it closed. So they brought it back up about, I'm going to say $40 or so. Now, again, too early to say, but I'm paying very close attention to this structure. Yes, it could be a 5-3-5, and that could be wave 4. Wave 4 are sudden reversals, but they tend to not get too far. So once again, 15,445, which is where 618, I'm not expecting a fourth wave to go that deep. I most of the time don't expect it to go beyond 50%. But if this turns and they rally it with the same intensity as it dropped today, we may be forced to say, yep, ABC, a 5-3-5, ABC, stick a 4, and it goes. Now, it's going to pull down a lot of these targets. But then again, they may buy it up, hold it up here, because next week we have Apple, we have AMD. Nope, not next week. We have Amazon next week. We have Apple. Apple's in August, actually. So we have Amazon. We have Google next week on Monday. Excuse me. We have Intel next week. We have Meta next week. We have Microsoft next week. So Monday, Tuesday, Wednesday next week, we get a lot of the big boys, and they will be coming in. NVIDIA, they don't even come through until quite late. So, they're even an afterthought. They're halfway through the third quarter before they decide to report second quarter, but that's NVIDIA. So we have a lot going on. Interest rates decided to retreat today after they've been rallying pretty strongly, bringing the rates down. Today, no. So what I thought could be building, even holding it up, in terms of you get that flight to safety, flight to quality, whatever you want to call it, bid. That kind of thought maybe, there was hinting yesterday. That's kind of what I thought I was seeing, because they held it and held it and held it. Today, hold the plug. And you can see pretty steady red all the way down. The 30, the 5, the 10, the Fed funds, and the 2-year. Pretty strong. Again, gold had a really good day, but they started buying the dollar. And gold doesn't like a higher dollar. In any case, today was just a pay attention day. As a day trader, you had to make money. You just needed to get in the groove with what they were doing and go with them. Depending on your account size and how many contracts you could trade, it could have been an average day or it could have been a really huge day. But the trades played and they played and they played. So again, tomorrow's going to be very informative, because I am hoping to get answers and clarity as to what those highs were, what yesterday's highs produced. Interestingly enough, just to quickly comment on the Russell, my opinion on the Russell is that it has been involved in a triangle. And this is wave E. That would be A, B, 1, 2, 3, 4, 5. And stick an E up there. Actually, A, B, and then 1, 2, 3, 4, 5, C. Excuse me. I stick an E up there. And what that kind of tells me that the Russell should start to give it up. And what it needs to do is, if it's done, it begins to thrust out of the triangle. And that means it drops all the way back to here. So Russell could be up for a real doozy of a killer. A killer slide lower. We'll see. We will see. We will see. But right now, it's not looking real good. Okay, so I'm going to leave it all right there. Again, I've given those breakpoints. Please pay attention to them. And follow the price action. If you're day trading, follow the price action. If you're looking that you've been waiting to enter into a short, yeah, it's tough, folks. And I truly get. It's like, well, you kept saying wait, you kept saying wait, and I'm continuing to say wait. I want confirmation from the market. But a lot of people get upset. They're like, well, I would have caught the top. It's like, well, you don't base your decision. You got to base your decision on your own trade rules and not somebody else's. But in any case, I know it's very difficult right now, and it may remain difficult. For all we know, we come in tomorrow and this thing will be up 2 or 3 or 400. And I'm not kidding. It has the potential to do just that, which will be wild. After a day like today, it would be wild for them to come and buy it all back up tomorrow. We shall see. That's where I'm going to finish it up for today. I'm going to wish everybody a very good, safe trading day tomorrow. I want profitable trading days for everybody. That's going to be my goal. I would like to see that across the board. Everybody saying they had a wonderful day. And the next update, the next Elliott Wave update will be on Sunday. Also, I will be trying to be very diligent and getting out, probably not until Sunday again. So I may be combining the podcast, the big picture technical update, combine that with the Elliott Wave update for Monday, but combine it as giving that big picture update as well on Sunday. So have a great trading day tomorrow. Have a great weekend. And I will be talking to everybody on Sunday.